Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on TradingView with over 190k reputation points. If you're new to the channel, make sure to subscribe. This is the place to be for high quality free trading education. So without further ado, let's jump straight onto the chart. In this video, I will be speaking about NZDUSD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is essentially what hedge funds and the big players in the market are doing and how they're moving their orders. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. Now, starting from the monthly time frame, what we can see is that we have a market which at the moment is testing exactly the previous monthly resistance from which all this move to the downside was created, which has now turned support at this level. Now, as the market is testing previous monthly resistance turn support, we could expect bullish price action to be created away from this level. So from a monthly standpoint, everything seems quite bullish and we could expect a potential rejection to the upside away from this level. Dropping down on the weekly time frame, what do we see? Well, from a weekly perspective, we can see how the market has just shifted from a weekly bearish market from a structure standpoint to a weekly bullish market. In fact, we went from creating lower lows and lower highs to now creating higher highs and higher lows. We can see, in fact, how the market has now created a series of higher highs and higher lows. And if we count them, we can see how we had the first high here. We had then the first higher low here, so higher than this previous low that was at this area. Then we had a new higher high here, a new higher low here, then another higher high, and now it will be the turn for the creation of a new higher low if this uptrend is to continue. So also from a trend perspective and structure, everything seems quite bullish. Now, if we look closely, we can also notice how at the moment the market is testing exactly the previous weekly resistance turn support at this level. In fact, from here, this previous rejection to the downside was created. The market has then broken above the zone, and this previous resistance was turned support here. And the market is at the moment testing exactly that previous weekly resistance turn support that we could in fact expect this market to potentially reject to the upside. Now, generally speaking, after an impulse, if you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse leg. And if we do that, we can see how we have the 50% and 0.618 Fibonacci retracements aligning up exactly at this area, which is also, as we just said, previous weekly resistance turn support. And this creates confluence of support inside of this area because we have both the 50%, 0.618 Fibonacci retracement levels and also the previous horizontal resistance now turned support, all lining up in the same area of price. And what we know is that if we have a confluence of support area, we have an increased probability of seeing institutional longing inside of the area, which at that point would further increase the probabilities of a potential rejection to the upside away from this level. Now, dropping down on the daily time frame, what do we see? Well, from a daily perspective, the situation is quite interesting as well. However, before we get into the analysis from a daily perspective, first, let's go and see what we have when it comes to the commitment of traders, so the COT data, so essentially what hedge funds and the big players in the market are doing. Now, the first thing to keep in mind is that if we are checking the data for the NZD, we are actually already checking NZDUSD because always remember that all currencies on the spot are traded against the USD. So if you check the data for the NZD, you are actually already checking NZDUSD. And what we can see here is that with the last reports on NZDUSD, net positions have been increasing quite aggressively. We went, in fact, from having minus 19.6k net positions all the way up to having minus 546 net positions. So we had a massive increase of the net positions with institutions adding to their longs and closing their shorts. So essentially, institutions have been increasing their long exposure on NZDUSD and decreasing their short exposure on NZDUSD. In fact, we can see how institutions went from having 7,958 longs all the way up to having 18,043 longs, and shorts got decreased from around 29K all the way down to 18K. So clearly, hedge funds have been adding longs and closing shorts on the NZDUSD. Therefore, they expect more bullish continuation. Now, keeping that in mind and moving to the technical side of this market, what we can notice is that the market here has just entered inside of this accumulation area. In fact, we can see a lot of horizontal price action. If this will continue, there is a high probability that inside of this area, we're getting more institutional longing, considering that, as we have already identified from a weekly perspective, this is a confluence of support zones. So at that point, we would have even more probabilities for a potential rejection to the upside away from this level. We can also notice that from a daily standpoint, the market has just created this M pattern. And in general, after the creation of an M pattern, what you would expect is a potential rejection to the upside for the completion of the M pattern at the neckline, which is the previous support turn resistance from a daily perspective. So we have two bullish patterns also from a daily perspective, this horizontal accumulation area and the M pattern, both suggesting that institutions are continuing to add longs. And at that point, we would have good probabilities for a potential rejection to the upside. So what I would expect in a situation like this? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily time frames combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and identifying early shifts in a trend of the market, the best time frames for that are the intraday time frames, so 4 hour and lower. Therefore, what I would expect in a situation like this is that if this market will shift from an intraday bearish market to an intraday bullish market, at that point, I would expect a potential rejection to the upside for the completion of this M pattern at the neckline and for the market to reject the confluence of support area that we have previously identified on the weekly time frame. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which you find linked both in description and in my bio. Here, you have the possibility to gain access to the most complete all-inclusive mentorship program that you could think of. In fact, you have all my courses, so risk management and trading psychology course, the day trading course, swing trading course, the MQL4 programming course on automated trading. And you also have the possibility to gain access to all my software, so the COT data software, the trading station software. And if you continue to scroll down on the website, what you will see is that you have the possibility to join and gain automatically access with the email and password that you will create during the sign-up process. So I really suggest that you go and check it out as soon as possible. The link is both in description and in my bio, and I will see you in it. If you enjoyed the video, make sure to drop a like. Also, if you have any suggestions on any topics or pairs that you would like me to cover in the next videos, make sure to drop them in the comments below, and I will see you in my next video.